It's that time of year, the season to get busy. Yep, the run up to the end of the tax year. But this year, with a twist, because not only do we have the end of the tax year, as always, 5th of April, we also have a budget on the 3rd of March. Now, that's the budget, I know you'll remember, that was pushed back from last October. So it comes with a lot of anticipation. What will tax look like? What's the future of tax going to be? Will we get a roadmap for what our tax future looks like? Possibly the latter. I doubt we're going to get any, and this is not any kind of great insight, but I doubt we're going to get any changes that will bring any risk of damaging economic activity. So that kind of, in my head anyway, rules out significant changes to income tax, national insurance and VAT. Any change to those that push those rates up are likely to damage economic activity. Can't be sure, we never can be, of course. That's my feeling. Also, we're just coming through this whole Brexit thing, and that will go on forever and ever, of course, but I'm sure we want to retain attractiveness for businesses to do business. So corporation tax change also maybe less likely, but we have had 2 reports from the Office of Tax Simplification on capital taxes. So there may be something there. And of course, we've got the perennial thoughts around, or perennial activity or discussions around, will there be any change to pensions tax relief? And of course, it costs a lot of money. I've said that many times before. So my point here is that it's very, very important that as advisors, statement of the obvious, you are prepared and ready and proactive about the onset of the end of the tax year. Be ready, of course, to have those bigger conversations around what tax might look like, but don't, in effect, get into a position where you can't see the trees for the wood, in the sense that the bigger picture conversations are had, but let's not forget the smaller picture must do every day more mundane things around year-end tax planning. And this year maybe is the time to consider looking at the end of the tax year, your sort of cut-off date for getting tax year-end planning done as the 3rd of March, at least, rather than the 5th of April, at least, I would say, for capital tax planning, capital gains tax, inheritance tax, and as ever, pension planning. That's not to say any change will occur to any of those, or that there won't be change to other taxes as well. But in my best bet thing, that might be the thing to do. So think about the 3rd of March rather than the 5th of April, and go for it. We'll be supporting you as ever through the content that we deliver in Techlink.